Top pick number one, Shopify, a play on online retail.
Look, we are big believers in focusing our attention on long-term structural themes that go beyond a business cycle. Shopify is the company that enables small, mid-sized internet retailers to grow their businesses. So they have 650,000 customers. There's probably 10 million that is their addressable market. So they have a little piece, 6% of the market. They're growing very rapidly, as you know, about 70% in earnings and revenue. They have lots of interesting opportunities. First of all, in the next year, they will attack sort of international markets, which they have not done up to this point. They're translating their programs and software into several European languages. So that is likely to be successful. Wix, which is one of their competitors, grew their business 600% in 3 years when they started addressing international markets. They are pushing services to their customers like payment services, shipping, lending capital, and that has allowed them in the last couple of quarters to increase the percentage take from each of the transactions that they do for their customers. So there's an opportunity there. So it's a giant market. We think they can keep growing their revenue sort of 75%. There's a long playing field here, and clearly this is disruptive. Internet retail is disruptive. It's not going away soon. And in a secular bull market, leadership can carry on for a long time, way beyond the end of a business cycle.
If there was a takeover bid for Shopify by Amazon, maybe, would you like to see the federal government block that?
You know, the risk to companies like Google and Amazon is, monopolistic risks. And I think that Amazon would probably have to think pretty hard about doing that. I think that they will face enough headwinds on that front to begin with without going out and being predatory. So I don't think that that's as likely. We just really like the business.
But would you like to see the government force this company to remain based in Canada?
I think that we need to continue to see competition, for sure. And I think that there is going to be an increased sensitivity to predatory monopolistic practices.
But in the national interest, I mean.
Yeah, I'm not a big believer in that. I'm a believer in the market taking care of the market. It's not a security risk. I don't think it's a likely thing to happen.
A part of our larger debate anyway,
yes.
Of course. E-Trade Financial is your next top pick.
Yeah, we've been a big fan of fintech for a long time. I've talked about Schwab before. Look, if we like the market, we got to like companies that benefit from more transactions. Transactions at E-Trade year over year up 48%. Their clients are largely private clients. Okay, so their transaction revenue is going up.
Okay.
Second, these companies.
I think we've jumped ahead to your next topic. Sorry, David. So E-Trade Financial.
Yes,
E-Trade Financial. Carry on.
Okay. So then E-Trade, second, benefits from rising rates. They get all that client cash balances and they take it and they invest it in short or midterm deposits. And as rates go up, they make more money. So that's the second reason. Third thing is it's a technology business and they are just naturally dragging in new customers who want to participate. So I like financials. I really like the brokers and a number of them. I really like companies that benefit from rising rates. Again, this is not about the business cycle. This is about a longer term theme.
Okay. Finally, Illumina.
Oh, sorry, one more thing.
One last thought, yeah.
One last thought. It's entirely possible that they get bought over the next couple of years.
Okay.
Because there are some rumblings out there that they could be for sale.
I thought you were pulling a Columbo on me. Remember that detective?
Oh, and one more thing.
Yeah, that's the devastating question. Illumina, your last topic. What do they do?
Okay, we were asked about Celgene earlier. I'm a huge believer in fintech, companies that are disrupting that industry. The whole industry around precision medicine ecosystems. Illumina is the only company in the world that can do high volume genomic sequencing. So taking DNA samples and sequencing the genome, whether it's 23andMe or whether it's an institutional customer. So they have sequenced about 1 million people so far. They have 1 million orders for 1 million in a backlog. There is nobody else in this space. They launched their product 5 years ago, 0 new participants in 5 years. They've launched their next product just recently. So they sell equipment, and then they sell the supplies that are used to operate the equipment, kind of like the Gillette, piece of equipment, and then sell the software. But we are going to see countries have more and more people's DNA sequenced, and this is very early stages of developing new medicines that are really specifically built from the ground up to address specific issues. So consumer is a market, institutional is a market. It's a company that's a mid-cap med tech company. Medical technology companies are really in the spotlight right now because we're finding better ways to get more done.
Interesting as well, of course, our DNA. Who actually owns that information? Yeah.
Great question.
I'm not handing it over to anyone anyway. I don't want to be replicated. One's enough. Anyway, thanks very much. David Burrows has been our guest on Market Call. Thanks for watching. The Encore airs Monday through Friday, 11 p.m. Eastern, 8 o'clock Pacific, and we're live Monday through Friday at 6 p.m. Eastern for Market Call Tonight.